Hello traders, welcome to another daily analysis. Today is October 27, Thursday. So today I stay up for the whole London session because I was gonna do an intraday trade for British pound. However, that trade was not valid, which I will explain further later on. But nevertheless, so I stayed up, so just observe the market, and basically we start with the negative sentiment with oil market, equity market all went down. But later in the London session, the sentiment changed, and then things become better, especially the oil market. But then, of course, later on went to a New York session, and finally we finished the day with equity market all went down, but oil market, WTI had a slight bullish candle for today. And the preliminary GDP from British pound quarter to quarter and year to year both came out as positive. And then the later New York session, the only important data was the core durable goods and unemployment claim, which both were not tradable for me. And moving agent session, we have Tokyo core CPI and national core CPI. Both were in line and slightly better than expectation. And then later on, actually it already came out. Okay, let me read to you the Australian PPI. Let's see what's the number, and then we'll know. Because when I wrote it, I was an hour ago. All right, 0.3 was actually negative than expected, but better than previous. So it's still okay. Well supportive for Australian dollar, I think. And basically, that's it for today. The biggest news was the dovish comment from Swedish Central Bank. And basically, they are going to do a further easing. And of course, that is a very negative thing for Swiss franc, because Swiss franc already has a negative interest rate. Also, basically the country was really trying very hard to devalue their own currency. So they are going to do that further. But as mentioned, don't believe anything they say. Things they already lost their credibilities. However, things is a dovish comment, so it's more valid because economic point of view, they don't want their currency to be strong. So which is fine, and their currency is naturally strong as they are one of the safe haven, one of the stable country around the eurozone. So this comment might be quite valid. They are going to ease further. And other than that, the bond market today was largely sold off. Now the reason is because people were waiting for this GDP data coming out. This was the first GDP data that was composed with everything post Brexit. So it was very significant, and now both quarter to quarter and year to year was actually positive, actually quite positive. And that everybody was buying bond because they were expecting BOE to cut interest rate. So now all the money flow into the bond market, and now this data came out, and then that has completely reduced the possibility of further rate cut for next week, because next week is their rate decision. So now investor, largely sold off their bond holdings. And then we'll see what happens next week to see whether they are holding the rate or they are ease further. But right now the possibility is on hold. Tomorrow we have advanced GDP quarter to quarter from US. That will be a tradable event also, but that will be at the 8:30 New York time. And also there is a German preliminary CPI, a French preliminary GDP. All these are not really tradable for me, but nevertheless it's a quiet week as mentioned yesterday, and the next week is going to be very excited because you have Bank of England, you have Bank of Australia. Oh wait, do you have Bank of Australia? I know you have Bank of England, you have Federal Reserve, you also have Bank of Japan and Bank of Australia. Yeah, so you have 4 countries is going to come out release their newest interest rate, and that's gonna, of course, everything else is expected to be on hold. So might not have it will still have a lot of volatility, but it might not change the fundamental too much. But nevertheless, that's basically the news today. Let's get into our trade today. But first of all, I was going to do an intraday trade today. Today I was looking to short cable if we have a negative data, and I was looking to long pang yen if we have a positive data. But my bottom line is that the data have to be a surprise. That means that I'm not only looking for positivity, I'm looking for deviations. Now, although the preliminary GDP from UK was positive, but it's still within the minimum and maximum number. So it was not really a positive, it was not really a surprise data for me to trade. And that's very important to understand, because look at what happened. This candle was the data release. Okay, so a lot of people actually jump into long British pound. And why do I know that? Because I'm in with a lot of traders on Skype, on forums, and people trade live. So for me personally, I never want to trade with low convictions. So a lot of people jumping at 4:30 when the news first released, which is this candle. Okay, I'm gonna zoom in so you'll see it. So this is a 5-minute candle. This is a 4:30 candle. So if you jumping at here, 4:25, closing at 4:30, guess where you're gonna get filled? Well, to be honest, you're not going to get filled at, a lot of people, they're looking after the events, they'll think, oh, if I jumping at this candle, I'm gonna get filled here. Most likely you are going to get filled at here. Okay, here is 128.14, and then you have one more candle to reach at 1.128 around 40. Okay, so that's about 30 pips. So 14 to around 40. Okay, 30 pips, and that's only if you sell at high. Okay, so it is very important. I'm gonna give you this lesson. So I'm gonna give you this reason why I only trade with surprise data. It's because you have this release, it's positive data, so you jump in. But the truth is that you will never be as fast as computer. So a lot of people are doing high frequency trading, a lot of algorithm trading, a lot of mechanical trading system. They are really using a formula and computer to enter and exit trade. So you as a discretionary trader, or at least for myself, I will never be as fast as computer, right? Because I will never be as fast as computer, I know that I will never get in at the low, and I will never get out at the high. So as I keep saying, our goal is to get the meat of the action. Okay, I repeat, our goal is to get the meat of the action, because you will never buy at low and you will never be able to sell at high. It's just impossible. So just be realistic. So that's why if you only have this maximum movement of 30 pips, you are really, playing with very low probabilities, because you're getting, unless your stop loss is also 30 pips. But when this kind of pound yen events, this kind of currency pair, easily move 50 to 100 pips, and you only give yourself 20 to 30 pips of breathing room, you have a very high chance to get whipsaw, to get stop out, even though at the end it goes to your direction. So if I look at this trade, I knew immediately whoever trade this as a discretionary trader without any news service, if you just waiting for forex factories, this kind of free service to come out and get it, you are going to lose. You are going to lose in the long run, because you might profit today, but you only get maximum 30 pips. And I know for sure that's impossible, because if you get 30 pips, that means you're getting at the lowest low and get out at the highest high. Now, as I say, only computer do that. So let's just say you get in between. Let's just say you get 80% of 30 pips. You get 24 pips. If you get 24 pips and you want to at least have 1-on-1 ratio, risk and reward ratio, that means your stop loss is only 25 pips. And just by knowing that fact, I already know that, for you, in the long run, you will have a very tough time, basically. And that's why it's very essential to always trade only with the surprise. Because a lot of people cannot resist the actions. They feel like, I've been prepared for this, so I have to take action. And I think that is really the hardest part about trading, is this trading psychology. Is that you have to be able to be there every day when it's necessary. But that doesn't mean you have to take the trade every day. In fact, that means most of the time you will be there, but not taking the trade. And that is the hardest part, to be in a run with all the actions, but without taking any actions. So understand that less is more. Be able to stand in this marketplace and just watch, just observe. And that is very hard for you in particular, because that against human nature. We humans are drawn into movement. We are drawn into taking actions. That's just our survival instinct. But trading is really against that human nature, is that you are in with a lot of action happening, but you have to sit tight and only move, only take your shot when you have a high probability. So that's just the nature of it. And don't be surprised, because even myself, every time I still have that urge to take action. So for me, it's a conscious effort to say, hey, stop it. It's not a good probability. Do not take this trade. So it's always a conscious effort, because it's very easy to get drawn into this price action. So getting into it, most people, what happens is they actually buy at here. They buy at high, and then immediately they are in drawdown. And now they have to wait. They have to wait for finally their first chance to get out at break even. And look at that. That's already 2.5 hours later. So you're basically really wasting your time in this kind of low conviction trade. Not only that, you're wasting your energy because you're getting nervous. You're in this drawdown. You say, oh, should I get out? Should I not get out? Oh man, I don't know. And then you just second guessing yourself. And then when it goes up, you start doubt again. You say, oh, maybe I should wait. And then it goes down again. And it goes further. Most people will not be able to resist the pain, so they'll just get out. But understand that currency market is a zero-sum game. So understand that, just by looking at this candle, I know that there's a lot of losers today. Because a lot of people jump in at this positive data only to get locking at the top and then suffering all these painful states. And at the end of the day, still in the trade. I mean, believe it or not, because I knew very well, because I was like that before. So basically, you went from 4:30 a.m. this morning all the way until right now. It's almost 9 o'clock. 12, 14 hours, 15 hours to stuck in one trade, getting very nervous. And all for what? You shouldn't have even entered it without any convictions. So just looking at this and understand, because when you look at a chart, you gotta understand exactly what is a chart, what is a candlestick. All this is just a representation of the price action, and the price action is just a representation of people. So understand that whoever got in here, you see this thin line, whoever got in here is the loser. And now all this, unless he got out already, otherwise, it's not a good day for him. Not only he lose money, he suffering all this emotional state. And that's why the reason to the solution to avoid it is really only trade when you have a high probability trade. Because I keep saying that in the market, you can do three things. You can buy, you can sell, or you can do nothing. You can buy, you can sell, or you can do nothing. And doing nothing, so don't do anything, is the key to succeed. And believe it or not, that is the key to succeed. Because doing nothing doesn't mean you're lazy, you're not even in the market. Doing nothing, that means you are there every day, observe the market, feel the price action, talking to every other trader who got into a trade, and still be able to say, hey, I'm not going to take it because it's against my trading play. And the moment you can do that, it's really you're on your way to become a professional trader. So that's just a tip give you that. And tomorrow again, I am going to trade the preliminary GDP from US. But again, my strategy is all very simple. I'm only trade when there is a deviation. So I'm only looking for positive number that is outside a surprise, outside the maximum, or negative number that's outside the minimum. Okay. Speaking of that, let me give you a number so you are able to do it. So tomorrow we have the just give me 1 second. We have the advanced GDP quarter to quarter. Okay, at 8:30 U.S. time, the New York time. So the expectation was 2.5%. Okay, 2.5%. Now, last advanced GDP was 1.4%. So we are actually expecting a very, very good data. You know, that's a whole 1% of growth from GDP advance. Now, if we see anything that's more than 3.3%, if we see anything that's more than 3.3%, that is a maximum. That is a positive surprise. Okay, so anything above 3.3% is a positive surprise. Now, if you see anything that's below 1.3%, okay, 1.3%, that is a negative surprise. So that's it. This is only these two numbers you're looking out. Anything that's above 3.3, you can buy US dollar. Anything that's below 1.3, you're gonna sell US dollar. That's it. That's the first step. And then follow this strictly. All right, if you don't see these two deviation, don't trade. Okay. Now, once you see this number, what currency should you pair up? Well, that really depends on what happened to the session. Okay. But basically, if you want to buy US dollar, then you want to pick a weak currency. Now, fundamentally speaking, of course, British pound is the weak currency right now. So you could do that for intraday trade. But other than that, you can actually pick Swiss franc, because Swiss franc is very dovish today. So that's another pair you can short it. And you can even pick euro dollar. Right. It's very simple. If you want to buy US dollar, you can basically go against with any other currency. The reason is because US dollar is considered the strongest currency right now. Now, the only currency I will not pair up with US dollar, and I will actually use that to go against US dollar. That means if we have a negative number, we're going to sell US dollar. Which currency we are going to buy against US dollar? I will go with Australian dollar. And the reason is because, again, they have the highest, one of the highest interest rate, one of the highest yield currency. Commodity price is picking up. Their trimming data, CPI data, was actually very good. And people were highly expected to hold the interest rate for next week. So there's no surprise coming from them. So, you know, really that's the only pair I will pick. But I will not, it's only going to be intraday, because I'm not going to short US dollar overnight or over any session. Now, if the US data is positive, if I'm long US dollar, then I might be able to hold it. But right now, I don't see any other, unless it's Swiss franc. Okay, if tomorrow the data is positive, then I probably going to long dollar Swiss franc, and then that will be a currency I can hold it for over the weekend. But other than that, actually, let me take a look at Swiss franc, and then I'll know more. So basically, I just give you a sort of like a intraday teaching lesson for you to know that. So that also depends on where are we, half hour before the news release. Because for me, another important criteria to do intraday trade is you want to have enough room. So let's say if your average range is 140 pips in the case of cable, and let's just say 140 pips, and depending on when you open tomorrow. Let's say we are open right now at 1.2150. So 140 pips will give us 1.2290. Okay, so 1.2290 will be the top. Now, if tomorrow we are already at this area, then I'm sorry, if we're gonna short cable, if tomorrow we are already at this area, there's no point to short it because we have little room, very little room to keep going. And again, that's just a probability. That does not mean it will not keep going, right? It does not mean the pair will never go out of daily range. On the contrary, of course, it will go out of daily range. Daily range is just an average, right? It's never gonna be a set number. But these are just tools for you to increase your probability. So understand, what I'm trying to do essentially is to give myself a better odds before I enter any trade. So I want to see a surprise in the fundamental data. I want to see a range in terms of my profit. I want to see there's still room to go in my price action. And I want to pick something that is fundamentally and sentimentally weak versus strength. And all these things in line give me better probability. However, even though everything is in line, I will still always remember that this is just a game of probability. That means there's a lot of chance I'm gonna lose, a very big chance I'm still gonna lose, because market is like this. That's the nature of market. You never know what's gonna happen. So that's why you always want to tighten your stop loss. That's why you always want to risk a certain amount of your capital and never go out of your own control. Okay, and understand this is a key to become a successful trader for a long run, for a life, right? If you're in this market and then you're just beginning and saying now, oh, I'm gonna double my account in 3 months, then good luck with that. I mean, you might be able to do that, but I really highly doubt that you'll be able to survive for years to come. Okay, so with that being said, let's take a look at our daily 28 pairs, see if we have anything. Okay, so take a look at Euro. So today Euro pound is again range bound. There's not much news coming out from Euro all this time basically. And so we just keep holding it. Oh, and that's my trade right now. So as you can see, we're almost get stop out, right? I was saying that, yesterday I was saying that this is a reversal signal, right? So what's gonna happen? I don't know. We'll see what's gonna happen tomorrow. But nevertheless, I am going to tighten my stop loss, up 1.4403, just slightly above the handle, right? And the reason is because I'm really not interested to hold it with this strong candlestick. It's either gonna taste this dummy out, or it's just gonna reversal down. So it's depend on what's gonna happen. But you know what? Thinking about that, I think I will actually keep it as it is and see what happens tomorrow. Because tomorrow, if we have a negative US data, it's going to help Australia. Yeah, I'm gonna see tomorrow what happened. I'm either gonna tighten my stop loss, or I'm just gonna get out tomorrow, and we'll see what happens. And the reason is because I'm still very dovish toward euro dollar, and Australian dollar is still very strong fundamentally. So I do think this level might be able to hold it, but I don't know. So we'll see what happens. Euro CAD, we have again first reversal signal today, and this might be a good trade to enter for me. To be honest, I do like the look of it, but I'm going to do further analysis later on. But just by looking at it, fundamentally, I know that Canadian dollar, although the oil market has a lot of speculation from the OPEC meeting, but in terms of the country, Canada versus Europe, I think Canada has more strength into the pair, into the currencies. And so it might be a good pair to hold it. I know sentimentally they are negative right now for Canadian dollar, and that's because they come from the BOC or come from OPEC. But since they say they are going to hold for 18 months, so it's actually quite neutral for the currency pair. So this might be a good entry, but I want to do further analysis later on. But I'm just going to write down first. Okay, just give me 1 second. I'm gonna write this down, because what happened is that I always journal my own analysis, even if I don't get in at the end of the day. I still want to know my thought pattern, because that's a very valuable lesson for you to learn exactly how you analyze your trade. Euro New Z and Euro Yen, basically, that's it. Nothing really happening. British Pound again should have some strength today, but haven't seen yet. Pound Aussie, it's all just range bound, and that's what I say. When you have a good news and you don't see any price action, that means that people are very reluctant to buy this currency, and that also means that it can only go one way. Swiss franc and Japanese yen, very interesting. Even after the dovish comment, they are still going up against Japanese yen. That just means that Japanese yen is very weak at the moment. And let's take a look at that. Euro yen, yep. Let's take a look at pound yen. Okay. Dollar yen. Yeah, so Japanese yen is quite weak at this moment. Dollar Swiss is actually neutral. Interesting. Because I was reading the news and saying that it was a huge gain for dollar Swiss, but actually it's neutral, so it's maybe just for intraday trade. Dollar CAD, again, it's quite neutral for today. Indecisive candle. And okay, Aussie Swiss. We'll have a down day from Australian dollar. Again, it might be the sentiment, it might be the profit taking, it might be many reasons, but yeah. So it's a down day for Australia. Yep, pretty much a down day for Australia. I don't see any news actually coming out from that. There was no data beside the 8:30, which it just happened, but it was for today. So really, for me, it's just a risk sentiment tone, since we do have an equity market going red today. CAD Swiss, again, a range bound day. CAD Yen, New Z Swiss, New Z Dollar, New Z CAD, and New Z Yen. Alright, so really the only thing I'm looking forward is the Euro CAD. And I'm going to do further analysis on this one to see if I'm gonna enter it. But so far I do like what I see. But we will do more analysis, and I will post on my website if I decide to enter this one. Okay. Alright, that's it. So tomorrow I will trade the advanced GDP from US, and that's pretty much wrap up for the weekend. And I want to see if my Euro Aussie is still going down. Now, just give you a side note, right? If I'm in a Euro Aussie trade, and normally I will not enter another short Euro, because essentially you are long or you are short in one currency, so you're overexposed. Now, why am I still able to do it? Because I'm already set to break even for my Euro Aussie trade. So that's the thing. You always want to wait for the risk to be removed before you enter another same currency pair. Right? A lot of people would just, because a lot of time you will see same movement within one currency, and you get very excited, right? Let's just say British pound is weak, and then you say, oh, let me short cable, let me short pound Aussie, pound CAD, pound New Zealand, pound Yen, pound Swiss franc, let me long Euro pound. Well, essentially you are actually expose yourself in one currency with every other pairs. And sometimes if you win, you feel like a king. You say, wow, I make 10% today. But, it's a double-edged sword, because if you lose, then you lose 10% in that day. And if you lose 10% in one day, then you're pretty much out, You're out for any kind of fund management job, or it's just going to damage you psychologically. So for me personally, I'm really careful about these kind of correlations. That I just don't want to have too much exposure in one single currency. Okay, it's just a heads up. All right, so I will come back tomorrow after the news session, and then do another analysis. Other than that, safe trading. Don't basically, be careful. Don't screw things up in your last day of the week. All right, and prepare, because next week is gonna be more exciting than this week. All right, thank you, traders. If you have any questions or comments, feel free to leave below and or contact me. All right, thank you very much. Bye bye.